All right, traders, so for today's video, we're going to be breaking down a simple strategy that in this particular case allows us to capitalize over $13,000 in profit trading the gold markets. And the best part is our strategies involve simple, basic concepts that are easy for beginners to follow. Where in this particular setup, as price is moving in your favor, you scale your entries to boost your profits. And as always, we're going to break down everything for you, including our live footage, trade entries, but more importantly, explain in detail how this strategy works. The purpose of these videos is to show you that trading does not have to be complicated. By just following simple entry-level trading concepts can help you make money in these markets, and that's what we're going to show you today. So with that being said, let's hop in the charts and get started with today's video. All right, folks, so as always, if you have any questions or need help, feel free to comment down below. You can also reach me more directly either via email or Telegram. You can access all of my official contact information down below in the video description. And while you're down there, don't forget to check out our valuable trading resources, including links to free demo accounts and brokers and prop firms that I use specifically for trading gold that provide various benefits, including up to 90% payouts, our VIP signals chat, so you can follow, copy, and profit from my own personal trades, auto trading, where the trading is done for you, allowing you to earn passive profits in the markets. And we also have our trading group where I personally teach how I trade these markets, as I'm about to show you today, so you can learn and make money as you are learning and improving on your skills. All of that and much, much more can be found down below. Now, like I said, I'm going to share with you some live trading footage, but I don't want to show it just yet because it's going to kind of spoil some of the things that we're going to be talking about. But right off the bat, folks, I just want to show you that from this point in the market, we entered for a series of sells, starting with a sell here for gold at 2685. Now, why do we go for a sell? And especially when we look at the structure of the market, what do we see? Price is going up. This is bullish structure. If we scale out over here, we can see the structure is bullish, right? Price is creating higher highs and higher lows, respecting this ascending trend line. And as we know, that trend lines can serve as diagonal forms of support and resistance. So if the market is bullish, why are we looking for sell, right? Because the traditional sense of trading is we follow the structure, we follow the trend. If we're in a buyer's market, we look for buy trades. If we're in a seller's market, we look for sell trades. So if that's the case, then why did we go for sells in this area? Well, for one, we can see how we have multiple touches of our ascending trend line from starting here, and here as well. All right. Now, this is important to understand because think of support, resistance, or even trend lines as a door. If the door's closed and you hit that door, most likely it's going to stop you, right? But the more that you hit that door, the door gets weakened and eventually you'll break through. This is applicable when it comes to your levels and zones in the market. If you have a level of support, resistance, or trend lines, the more that that zone gets hit, the weaker it becomes. And the fact that we have multiple touches, the weaker this trend line is getting. But we don't just want to assume that, okay, well, if it's hit multiple times, let's just go for buys or sells. No, we got to find other confluences to confirm that most likely price is going to go in our predicted direction. So again, we're looking for a sell in this region. So what else can we see? Well, if we scale out from a higher time frame, we can see that our point of entry is at a rejection point from a level of resistance, right? Level of resistance here, that if we stretch it out to this point, was a level of prior resistance here and here. Now, what is this pattern? This pattern right here is an example of a head and shoulders. We have the left shoulder, the head, and the right shoulder. As a result of this head and shoulder pattern, the price of gold dropped significantly. So when we see this level of resistance is prior resistance and support from this head and shoulders from a higher time frame, this signifies a key level of resistance we want to be mindful of. As price came out to this level, it attempted to pierce it but failed to close above it, resulting in a bearish engulfing candle, closing price back below this resistance, resulting in what we could call a bearish flag, right? Where we have the flagpole with consolidation, attempting to break through that level of resistance, but failing to do so multiple times. This shows weakness in the markets that most likely price is going to be headed down and possibly cause a trend reversal. Now, I want you guys to take note that what we're doing here so far, folks, we're just paying attention to the structure of the markets, right? Just paying attention to basic concepts of trends, supports, resistance. That's it. We're not even using indicators, which, as you see from previous videos, we do use the RSI as a reference from time to time. But from here, we're not even seeing, any types of divergencies of any kind. We do have at one point where the RSI is completely overbought at the region where it failed to break through that resistance. Typically, I don't use the RSI for the purpose of overbought and oversold scenarios, but this is to further show you that price is exhausted at this level and most likely cannot go any further. So because of these confluences, we entered for a sell at 26.85. Now my take profit target is set at this point right here. Why? Because this is a significant level of support from this wick, these wicks, which was also prior minor resistance here. The reason this is so significant, especially over here, is because when price came down and tapped onto this ascendant trend line, which was also a prior support, it immediately pushed price back up. All right. So because of that, this was my target for my take profits at 26.64. So as price progressed, we can see price came down exactly at our take profit target at 26.64. Remember, when it comes to your take profit targets, you want to set them at levels of resistance or support. Reason being is because the markets tend to magnetize themselves to these areas for a retest or a breakthrough. So, contrary to what a lot of people say in YouTube videos, you don't want to set your take profit target at a 1-to-1, 1-to-2, or a specific risk reward ratio. No, you want to set them at specific zones in the market. But here's where things get interesting. As you can see from the screen recording, our first entry was actually, no, it wasn't 2685, it was 2687. So yeah, first entry was at 2687. But as price continued to drop, we scaled our positions with additional sells at 2682, 2676, 2674, and 2671. So this is the beauty of this strategy. Like I said earlier in this video, as price is heading in your direction and breaking previous levels of structure, we are scaling our entries by placing additional sells in this example to boost our profits. Why? Well, our first entry, of course, we already explained here at 2687, rejection at resistance, right? But then we took another sell at 2682. Why? Because it eventually broke this structure here. Price is consolidating in this area. As price came down to these lower levels, it wicked up to tap into this level, what was prior support, now serving as resistance. This is something we talked about recently in our previous video, talking about market structure and breaks of structure. This is exactly what we're talking about here, folks. We are seeing breaks of structure and capitalizing on these moves. As price broke through our support and retested that area, this is where we entered for the 2682 level. Now, as price continued to drop, we started to form a new level of structure with a minor level of resistance. So this is where we trailed our stop loss into profit, which I'll explain more in a moment about the benefits of doing this. It failed to break through this area, creating a level of resistance, followed by another entry at 2676. Why at 2676? Because price is now breaking below our ascending trend line, which again, folks, ascending trend lines serve as diagonal forms of support, which, as we had mentioned before, the more times that an area is hit, the weaker that zone gets, and the probabilities of those zones breaking gets higher and higher. So as a result of testing and then eventually breaking our ascending trend line with the wick, we entered for our fourth position at 2676. With the confirmed breakout, we added another entry at 2674. Followed by a final entry, which again, very similar to this area. We had a minor level of resistance for our last entry at 2671 before hitting our take profit at 2664. Now, another thing I want to point out, which as you can see from the live footage, as price is getting close to our take profit target of 2664, you can see how we trailed our stop loss from our higher entries into profit. This is one of the best ways to not only eliminate your risk from your trades, but it also guarantees that your trades will close in profit if price were to reverse and hit your stop loss. This is something we'll cover in more detail in a future video, but as you can see, price eventually hit our take profit target of 2664, closing out a majority of our trades. We had to close a couple of the others manually, resulting in a total profit gain of over 13,000. Now, coming back to the chart, I want to clarify one other thing. As we were scaling our trades, all right, we weren't just scaling our trades as price was going down. The main reason why we scaled our entries, which in a sense, folks, is kind of like dollar cost averaging, is because of the fact that price was breaking previous structure. What do I mean by that? When we look at the previous structure is bullish, right? There's no denying that. But as price is coming down from our entry points, where we were previously seeing higher highs and higher lows, as price is coming down, it is breaking those previous higher lows. All right, so this is an example of a break of structure, which, as we discussed in our market structure video, whenever we see breaks of structures, these are signs of potential trend reversals. Where we were once in an uptrend, we are now starting to see the development of a potential trend reversal, aka a downtrend, all because of the rejection and failure to break this key level of resistance. Since it failed to break this resistance, and on top of that, has hit this ascending trend line multiple times, thereby weakening it, all the more reason to look for sells in this area instead of buys. Now, as I like to do with a lot of my videos to add a little bit more transparency, obviously these aren't setups that we've just randomly found in a chart to show you how a certain strategy works. I mean, obviously this is why I show you my live trading footage and the results, but I also want to show you that these are also trades that I share for our students and members within our VIP, specifically this setup here where we caught a sell in this region where our students caught this sell as well, capitalizing over 200 pips in profit. So if you're interested in learning how to use these strategies to your advantage, or just want to follow and copy my own personal trades, you can visit our information down below. So as you can see, folks, we're not overwhelming ourselves with advanced concepts like smart money or institutional trading. We're simply applying beginner entry-level trading concepts like trends, supports, resistance. We buy at levels of support, we sell at levels of resistance, we wait for price to reach these levels, and then we act accordingly. Keep your trading simple, and as you can see, folks, by keeping it simple, you can make money in these markets. This is one of the many concepts that I teach within our trading group, alongside with dedicated modules on my own personal strategies on how I trade gold, as I shared with you today, allowing beginners and struggling traders to make money as they are learning and improving on their trading skills. So if you want to learn more about our trading group and our VIP trading room, you can visit our website or click the links down below in the video description.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.